Welcome, everyone, to another episode of Back and Forth Becker Orr. Lots of fun topics today. You can see them at the bottom of the screen, including the leadoff topic, commodities, inflation. We're going to go through all of that. You want to stick around.
Yes, another exciting episode of Back and Forth. We are covering a variety of different topics today. We're all over the map, but we want to make sure we answer all the questions. Remember, if you want more of this or more of our Financial 15s, please go to our YouTube channel and subscribe. Lots of great content there. We're more than happy to have you. You can get all this if you subscribe more and more. If not, please like us on Facebook, or you can also go to our website at beckerorr.com. First topic, Clint, commodities. They are the most popular thing in the market right now. Should we be worried? Should we be buying, selling? What's going on?
Yeah, well, I set the scene here. I'll use a couple of quick charts. So you've got oil spot price here. You can see it just skyrocketing. This is just a short-term daily chart. So you can see it went all the way to 130, then started to peter back off. Or if you want the broader commodity complex, you can look at the CRB commodity index, which has energy in there. It's got agricultural in there. It's got a broader commodity suite. Insane pattern. Absolutely spiked recently and just started to come back off. What is happening here, and is it going to be a concern going forward, Kevin?
Yeah, you know what? I think that we've seen a gradual increase in this, and that's because we've seen oil prices going up. You've had supply chain constraints. You had Omicron come around, so all of a sudden prices were spiking again. Nobody was increasing. Things seem to be normalizing a bit, and then you had the Russia-Ukraine conflict, and all that's done is just shoot everything commodity-wise through the roof because the Russians, as well as the Ukrainians, are some of the biggest commodity producers in the world. They supply a lot of Europe. They supply a lot of Asia. So the more you get involved in that, we're just going to continue to see this. Now, again, we get that sort of pendulum swing where everything overdoes it one way, and then we start to normalize. So I think that's the position we're at the moment. But going forward, I think the conflict's going to have a large influence as to where the commodities go. Would you agree?
Yeah, it probably will. I mean, who knows how that'll be resolved? And yes, it's going to influence commodity prices. Also, commodity cycles tend to be a little longer. So perhaps this could be, an ebb and a flow, but of a longer cycle. That certainly is possible. And for investors, I mean, leaning into strength makes some sense. That's why Canada's kind of done better than the US or other countries because we have more in our commodities. So recently that has been a plus for Canadian investors. And then on inflation, because it's all related here, right? If all your energy costs, all your agricultural costs start going up, well, it's going to feed into everything else. And we've already seen inflation go quite high. It's spiked in the US. It's high in Canada. And I think there's another leg higher because of this commodity spike. Now, what does that mean overall for the economy? Where does it go? I'm not too sure. But it does mean, unfortunately, we're not done with this inflation spike. There's probably another rung, another leg of this inflation spike yet to come. Are you on that same page?
Yeah, exactly. I mean, the last time we saw any sort of a commodity run was basically after the Great Recession. And you'd seen some stuff going around there for a while. So, I mean, you're right. They could be a longer term scenario, but you're definitely into it with the inflation side. The more that the price of oil goes up, the more that the price of food goes up, even though those are considered to be taken out at times from the overall inflation scenario, we know what it really does. And yeah, I would agree that that's definitely something that has to be concerned. And how long it's going to last, we're really not too sure. But that sort of answers the commodity questions as a quick synopsis on a higher level overview.
Yeah, and I would say the longer we have higher inflation, the more concern we'd have about the economy slowing down. If it is a quick spike and the central banks get it under control, which I'm not sure if they'll be able to do that, but the higher the spike, the longer it lasts, the more concern you'd have for the economy. But moving on, we got lots of topics to cover here, Kevin. So we talked about commodities, talked about inflation. Let's move to the movie theater. We both are pretty big movie buffs. Have you seen the new Batman?
No, I haven't seen it yet. And I sit there and I think part of the rationale has been the almost 3-hour time length that this movie is. This is one of the longer Batmans. And of course, you're sort of starting that franchise all over again. You had the Christopher Nolan scenario. You brought in Ben Affleck to do more of the Justice League now. And now you're sitting there with Robert Pattinson doing the whole scenario. And this is probably more of a darker version. I know people that have seen it and say that it's well done. And again, it's one of those things where I'm more of a Marvel guy than a DC guy, but Batman's sort of the exception to the real rule. And, I am looking forward to seeing it. Maybe this weekend I'll find some time to put 3 hours away and watch the movie. What do you think?
I have not seen it yet. I tend to like the Batman movies. I love the Christopher Nolan trilogy there, starting with Batman Begins, The Dark Knight. That whole series was phenomenal. Wasn't a big fan of the Ben Affleck Batman. I probably will go watch this one, and it is quite successful. They've knocked it out of the park so far. been out there for 2 weeks, already over 463 million of worldwide sales of the box office, which brings it higher than Shang-Chi from Marvel. I don't think it's getting to the Spider-Man levels. I don't think you're going to see it go that high, but certainly it's a successful movie. It's been a box office smash, which means anything in the movie world you have a hit, you got to release 2 or 3, maybe 4 more sequels. So we're probably going to see Robert Pattinson as Batman a couple more times yet, just based off of the success of the first one here.
Yeah, and I do feel that you're probably getting a lot of that because there's been very limited releases that have come out. I mean, if you had 3 or 4 other movies against it, maybe we're not at that almost 500 million worldwide. But, by the fact that they're just releasing sort of these superhero movies, I think you're going to see more and more of that. Doc Strange will probably be the next one that we see that's going to play into there. But
that's true.
That's where we're sitting at that point. Now that we're done with the Batman, tell us about the Fed, Clint. Everything happened yesterday. Or 2 days ago. What's going on?
Well, it's all the same story. We talked commodities, we talked inflation. Central banks, Bank of Canada raised rates recently. Then yesterday, the Federal Reserve followed suit. First time they raised rates in about 3 years. And not only that, but they say they're going to do it 6 more times this year. Pretty much every time they're going to meet, they're going to be raising rates. At least that's what they said. We'll see if they follow through. They could change their mind, of course. But that was the headline. And then they also intended not only 6 more times this year, but they could be raising rates into next year, all in the idea of trying to fight that high inflation. And the market the day of actually went up yesterday on this announcement. So what are your thoughts there? Does that mean the market likes the higher rates? What's going on?
Well, my view is that I don't think markets ever like higher rates. And I think the fact that he said there's going to be 6 more, the first conclusions to me is that they're going to be quarter-point raises. We're not looking at a half point here or 3/4 of a point on any one of these things. So theoretically, if you do that, maybe you're at 2% by the end of the year at the most. But I think a lot of this has already been factored into the market. That's another key for why the markets, I think, went up, is the fact that we knew we were going to get raises this year, whether it's 4, whether it's 6, whatever the case may be. I think that's already been played into the market, as they know you have to combat inflation. Now, we've proven that this is not strictly transitory, but again, the Russia conflict starts to solve itself. You get a couple of these rate hikes in. If you slow the market down as Omicron and the rest of the COVID scenario disappears, maybe we get more reopening. Maybe we start to see things normalize. So yeah, I think some of that's been priced in, and that's probably where we are at the moment. But, it's always something that we have to keep our eye on month to month to month, don't we?
Yeah, an important note here, the Fed is kind of behind the 8 ball. Inflation has already spiked. It's already here. It's already quite high. And other central banks around the world have already started to raise. Usually the U.S. kind of leads that global central bank trend. Here, they're actually behind. Other banks have already moved. So I think they have to move, and I'm not sure what they're going to do is actually going to be enough to really tame inflation, but we'll have to see. They got to do something, and that's what was announced yesterday, was all those different rate hikes. So inflation, interest rates. Let's get the topic you've been waiting for here, Kevin, the hockey topic. And the trade deadline, which is coming up on Monday. We all know you're a big hockey fan. I'm a big hockey fan, but what do you think is going to happen for the Jets approaching the trade deadline?
Yeah, you know what? We've been tinkering around with this for I don't know how long, and the biggest factor that's going forward has been the fact that the Jets, 9 points out, 4 points out, 7 points out, 2 points out. They are all over the map. And the fact that this has not been defined has really made it a hard scenario for Kevin Cheveldayoff. I think they have 2 more games before tonight and Sunday. If they win and split it, I think that they keep everything they've got. If they lose both, you could get Kopp as well as Stastny on the trading block. If you win both, I think it's a definite that they're going to hold these guys as self-rentals going forward. It's not an easy call being, 2 or 3 teams to jump, but it's going to be an interesting play to see what the next 4 or 5 days brings up for the NHL and the Jets going forward.
Yeah, I'll be down to the wire. Yep. Where you got a couple of games that I still think the chance to make the playoff is slim, but admittedly they win those games. They have better odds than not. But still, down to the wire to determine who they trade, if they trade anyone at all, right? And what if they split the games? What if they end up in the middle? They win one and lose another, and they're still kind of on the fence, which is a very real possibility of the way they've been playing recently.
Yeah, all these armchair GMs have already gotten everything solved, but the problem is that they don't have the final pull on this. And again, it's going to be an interesting play to see how tonight and Sunday night go. And yeah, my view is they're probably not going to the playoffs, but I also don't think that they're going to trade any of those guys if they split or win both of them. So yeah, we'll wait and see. And I'm just, fingers crossed, hoping what I can. That's just the way it is. But now that we've finished that, we'll get to our question that we've been dealing with for the last little while. And again, it is appropriate at this time, Clint. What's the question that we've got today?
Yeah, we get this question recently quite a bit, and it has to do with tech stocks because the market's been down. We've had a lot of turbulence in the market. We talked about commodities being the strong sector, everything else not so strong. Specifically, technology stocks have been hit pretty hard. And that's why people are asking, is now a good time to be buying those tech stocks?
Yeah, I mean, that's the biggest question. I mean, depends on, we've had a big peel back. I mean, some of them have come down slightly where you're 5, 10, 15%. We've had others that have imploded 50, 60, 70% from where they are. Yeah. And is it probably a good time to buy? Well, it depends on what your view is for the economy going forward. I think that, over the next little while, we probably still maintain that volatility that we've had based on inflation, based on interest rates, based on the uncertainty in the Russia-Ukraine conflict. But for longer term, you probably are getting some bargains here to get into, whether it's the big names buying the Apples or Microsofts, or whether you're looking at the other side, Shopify, should I buy it from where its high was, or Lightspeed. These are other ones that we could take a look at. So overall, I think that buying tech for the longer term is good. If you're looking to make a small pop, the volatility in the next little while may not work in your favor, but overall, as long as the companies are sound, you probably got a good buying entry here. What would you say?
Yeah, I mean, always any decision, it has to be your time frame, your risk tolerance has to fit with your overall goals. You don't want to buy tech just to buy tech. It has to be a good fit with your overall plan. But in this particular scenario, they have been beaten up, but by no means does that mean the volatility is done, right? You are going to step in and attempt to catch a falling knife. There's a good chance you will get cut. You won't get the bottom. You have to be prepared for that. Even because a company may drop 80%, doesn't mean it can't go down even further.
That's right.
So that's what you have to prepare. If you're trying to go buy a Peloton or buy one of the other companies that have been absolutely beat up, you likely won't get the bottom, and you're going to be buying a crashing stock down with momentum. So you have to be prepared for that. And if you're thinking, you know what, I prefer to avoid that, well, maybe look at the bigger companies, get something a little more stable, a little less volatility, but still in that space. The Apples, the Microsofts, many of the other tech giants are still off their highs with all this turbulence. But if you have other questions you want to throw at us, of course, we'd be happy to help out. You simply go to the website, chatwithclintonkevin.com. Whatever it is, financial topic, maybe you watch the Batman, you have a completely different take. We'll be open to hearing from that. So please let us know, chatwithclintonkevin.com. We'd love to hear from you. Any parting words for the folks, Kevin?
Yeah, no, our movie blog will be starting in a few weeks where we can discuss the Batman if anybody has questions on it, as well as any of the new movies coming out. And we'll go out with our back and forth and see where we want to go from there. Other than that, I think we've covered a lot of topics today. We've given you that high-level view on a lot of things. As Clint said, any questions, please feel free to contact us anytime.
Take care.